Hey, Moneymakers, welcome back to another episode of Taking Stock Live. I'm Kalila, and it's my pleasure to be here with you yet another week. Big up to everybody who is joining us live this week. I know we have heavy competition with the Reggae Boys versus Curacao tonight. It is a big night. But for those of you watching the rebroadcast, we appreciate you as well. Big things going on. And we still have to keep the show going because in the financial world, we also have something that we haven't heard in a while for 2025. We have an IPO alert as Dequity Capital is looking to raise some money for whatever they have going on. We're about to find out, and they're going to be up to that task. We'll be speaking with the CEO, Kadeen Mairs, to find out more. Plus, later on in the show, we'll be taking a look at Carib Cement's latest numbers and what we can expect from them in the future. But before we start, don't forget to hit that like button, subscribe to this channel, and let me know in the comments what part of Jamaica or what part of the world you are joining us from. Here's a look at what's coming up in tonight's show, followed by what's hot in business. And come on, let's get this money. On this episode of Taking Stock, Dequity Capital Management is looking to close the year out strong by becoming the JSE's first main market listing of the year. The company is seeking to raise just over $657 million. What will they use the funds for, and why now? CEO Kadeen Mairs joins us. Plus, the analysts weigh in on the latest market developments. Carib Cement's third quarter results are out. How did they perform? We'll discuss.
But first, here's what's hot, brought to you by JMMB Group, your best interest at heart.
Jamaica Broilers is reassuring investors that its recent financial performance is a result of extraordinary one-off conditions. They say it won't impact the long-term strength of the company. The statement comes after JB reported $7.2 billion in net loss for the year ended May 3, 2025. The company's Jamaican operations reported a net profit of $2.5 billion, which was entirely wiped out by $9 billion in net losses from the U.S. side of the business. The company said accounting irregularities in its U.S. operations forced a restatement of prior results, which included a massive write-down of some assets. Hurricane Melissa caused an estimated $36 billion Jamaican dollars worth of damage to Jamaica's agriculture and fisheries sector. That's $224 million US dollars. According to Agriculture Minister Floyd Green, the fisheries sector suffered about 6 billion JMD or $37 million US dollars of damage. The minister said that over 41,000 hectares of farmland were destroyed, impacting more than 70,000 farmers across the nation's most productive parishes. He said the Agricultural Disaster Recovery Task Force has been reactivated. Approximately $450 million has been allocated to begin the steps to recover. Dolla Financial says it will be extending the timeline for its bond offer because of the disruption caused by Hurricane Melissa. The offer was originally set to close on November 13, but has been extended to December 31. The microcredit company wants $1 billion across two tranches. The first tranche has a dividend payout interest rate of 11% and matures in 3 years. Tranche 2 matures in 5 years and has a 12% interest rate. The minimum subscription is 20,000 Jamaican dollars, followed by increments of 10,000. The United States Treasury minted the final pennies last week. President Donald Trump announced earlier this year that the country would stop producing the 1-cent coin due to the high cost of production. The last batch of 5 coins was minted with an omega symbol, representing the end of the 232-year-old coin. The coins are expected to go up for auction in December. Experts say they could go for $5 million US dollars each.
What's hot was brought to you by JMMB Group, your best interest at heart.
So many people across Jamaica have lost so much from the sheer destruction caused by Hurricane Melissa. We at Money Media express our deepest sympathies to those affected by this catastrophe. It will take support from all of us as a nation, those at home and abroad, to help this small but great country recover and rebuild. If you are able, please give whatever you can, whether it's money, time, or donations of food, water, clothing, sanitation equipment, or anything else the survivors need. It helps a lot. You can donate safely or sign up to volunteer through the government's portal, supportjamaica.gov.jm. If you'd prefer to use a non-government organization, you can give through foodforthepoorja.org or various community or church outreach programs. But please be careful of scam websites. Also, don't venture into hard-hit areas just to look around. Let proper relief and rescue organizations do their work. Let's stand together to help Jamaica recover. Welcome back. And like I said, it's going to take a group effort. It's going to take all of us at home and abroad to unite to help Jamaica rebuild after Hurricane Melissa Category 5 catastrophe. And if you're abroad, your loved ones need you. And here's one way that you can help. You can use Tap Tap Send to send money back home. And when you send money using Tap Tap Send, there are no fees. No fees. So you send $100, your family member gets $100. And now you can get an additional $20 on your first transfer when you use the code Kalila10. So if you send $100, your family member is going to get $120 when you use Tap Tap Send for the first time using the code Kalila10. Now, like I said, we're going to be talking all things Dequity IPO tonight. So before we get started, here's a quick look at the offer. Dequity Capital Management is looking to raise 657 million Jamaican dollars through an initial public offering. That's about 4.1 million US dollars. Dequity is a private equity firm that invests in companies across several industries, including healthcare, real estate, financial services, and others. They're offering just over 657 million shares priced at $1 each. 263 million shares are reserved and the rest are available to the public. If the IPO is successful, the company plans to list on the main market of the Jamaica Stock Exchange. The minimum amount of shares you can buy is 10,000, followed by increments of 1,000. That means you can participate in this offer for 10,000 Jamaican dollars plus fees. That's about 62 US dollars. The offer opens on Thursday, November 27, and is scheduled to close on December 18. VM Wealth is the lead broker, and applications are being accepted through the VM Wealth IPO Edge platform. The link is in the description. And joining us now to learn more about this groundbreaking IPO is CEO of Dequity Capital Management, Kadeen Mairs. Welcome back to Taking Stock, Kadeen.
Hi, Kalila. Thanks for having me once more. I think this is like deep time on the program.
And I have to say congratulations, because you might be the first entrepreneur to take two companies public, to list two companies, to grow from scratch. Grow from scratch and list on the Jamaica Public Stock Exchange. That's huge. Congratulations.
Thank you. Thank you.
The work ethic. The only other company I can think, maybe the Lascos.
Yeah.
You have the 3 Lasco companies, but it's still a different situation. Man, big ups to you. And I know you have some more coming up under your belt, which we might get to talk about a little bit tonight. So for those who are not familiar with Dequity Capital Management, what is it and how do you make money?
Okay, so basically, and this is a question that I get because for most of the companies that I've started in the past, they're pretty much straightforward in explaining. For example, Dolla, we lend money. It's pretty straightforward. Private equity is probably something that is a bit new to Jamaica. And basically how I break down what we do is I use it similar. I'd use an example similar to persons who would go around and buy houses in great locations that need to be fixed up, and then they put them on the market. That's kind of like what we do with businesses. We look for good businesses that are run by great entrepreneurs, And what we do is we go in and partner with these entrepreneurs and we fix their business up. We look at the corporate governance, their structure, their sales, their back office. We give them the support that they need to get to the next level. And most times these entrepreneurs are aligned with us in terms of building a company that can be listed on the stock exchange. So we go in, grow them, provide the capital that they need, list them on the stock exchange, and that's how we make our money as well. That's one side to making money. Also, what we do is we actually provide financing to our portfolio companies, so we get interest income from that as well. So our main income is from gains, unrealized gains from our investments, or realized gains, and then we also get dividend income from portfolio companies when we grow them. For example, Dolla is a portfolio company. At IPO, the pre-IPO, I think we had 25%. At IPO, we sold down a percentage of our shares and we got down to around 20%. We maintain our holdings. We got back the money that we invested initially. And then what you find now is that we hold the company for the long term while we still give support to the company, and we get the benefits of the share price increasing, and we also get dividends from these companies.
Okay, so you invest in companies, try your best to grow them. That's the objective. And then at some point you want to exit. So you want to grow them so that you can sell at a profit.
Partial exit.
And then along the way, you also earn dividends and interest income from these companies.
Correct.
That's basically the structure. So tell us about the companies that you have in your portfolio now.
So basically, we have around 9 companies. We started out with a company called M24 Investments. I started that company when I was actually 24. Out of M24, Dolla was born. We sold that loan book over to Dolla, and Dolla focused on lending, and M24 focused on cambio, remittance, check cashing. We had one location in Montego Bay. Now we have 2 and 1 in Kingston. So that falls a part of our financial services industry that we invest in. And of course, we have Dolla Financial that you know about. We're in real estate. We have a company called Johnston Development Limited. And basically in that company, we focus on real estate, construction development. We just completed our first project, so we'll be seeing some dividends or returns from that development. And that was recently completed in Kingston, around 54 apartments. We're looking at other.
Where in Kingston?
1 Graham Heights. As you go up Graham Heights, you can't miss it. It's a very nice development.
Uptown. Kingston 8.
However,
Kingston 8 or Kingston 6, one of them.
Kingston 6. However, as you know, Kalila, with everything with the hurricane, I'm from Westmoreland, so you know my family has been struck. Immediate, extended, my school is gone, everything is down, so we've been down there trying to give back as much as possible. But of course, this has led us to kind of be more focused on rebuilding and doing some housing developments down that side, more affordable housing. I think that's where our portfolio company will be looking at in the future.
That's great.
Yeah. So that's one. The beauty about it is we've already made the investment in these companies. They have proven their concept. You know, they have a development can show you sales and returns. So that's the development side of the business. On the healthcare side of business and telemedicine side, as you know, we acquired MD Link, and we also invested in 2 hospitals. We acquired Winchester Medical and Surgical in Kingston and a private hospital in South called Royal Medical Hospital, and we merged them together. So basically, we have a hospital group now that we continue to look to expand. This is actually an area that I'm excited about because it's so diverse. The more I learn about it from the entrepreneurs that are involved, and it just creates so much diversity to Dequity and the industries, because as you can see, what's happening to companies, what's happening to with the weather, anything can happen. And what you need to have in your portfolio is a company that is diverse, where when one thing happens, whether macro, whether it is natural disaster, whatever it is, when one thing happens, that company, even if one side goes down, it creates a spike on the next side. So that's another industry that we invested in. We invested in the insurance industry as well. We didn't buy an insurance company. We invested in a brokerage So how they make their money is they get a percentage of each premium that is made. They don't take risk directly in the actual insurance and claims. So we're in that industry as well. We look to grow and see where next we'll take that company. We're in the outdoor advertising and print, of course, with a company called ECS. They do a lot of like any signage that you need to do. They're involved in that space. They are actually based out of Mobile. We recently expanded to Kingston. They took a little hit in terms of their covering, but all their equipments are good. And we're rebuilding quickly because the businesses in Western Jamaica, there are no signs. And, the Prime Minister says he's looking forward to everybody that can to get back to business and open up back. So we're looking forward to helping companies put back up their sign, feel confident about their business as they did before. We had a small gaming business under the betting gaming and lotteries commission license, where we had a lot of small gaming units in different locations as well. So what we do at Dequity is we try to create a diverse portfolio of companies and companies that they have the potential to be listed and entrepreneurs with the ambition. It's not easy, as you can imagine, Kalila, but it is possible. Our ambition is to, and I think I've mentioned this to you before, our ambition is to basically acquire 2 to 4 companies, and we want to list at least 2 of our portfolio companies, 1 to 2 of them each year. If we're able to do that, we're able to, as you can imagine, invest in 50 million in a company, growing it and able to get a 10x return. We can invest 550 million, hypothetically, grow that value to 500 million, and at IPO, that 500 million can increase as well. So that's the business model.
As you mentioned that, the last time you were on the show, let's line up this clip. The last time you're on the show, this is what you told us. The next question comes from Philip, who wants to know, when is the Dequity IPO?
So I can answer this one. So for us at Dequity, we have to have a proof of concept. We have all these portfolio companies. We have another acquisition to announce soon. So what happened is similar to MD Link, whether it's Royal Medical Group or Elite Concept and Solutions, all of our portfolio companies, the aim is always to grow them, build them, list them, and hold. But we have to prove that concept first. We've proved the concept when it comes to acquisition, but can we prove the concept in terms of having a blueprint to lead these entrepreneurs to their dreams of having a listed company? I mean, I've done it for myself, but have I done it for somebody else? Not yet. I mean, I've made promises to Chet and other entrepreneurs that I work alongside them to get them there. I think as soon as we can hit 2 consistent IPOs as Dequity, I think that Dequity can start looking at raising its own capital to continue to do what they do, which is, invest in SMEs and grow them to, be a listed company.
So that was, I think, last year. So you said you wanted to exit a couple of them before you listed Dequity. And here we are, 2025. You haven't exited any. So none of the companies have gone to IPO yet. Why the change? Why list now?
So, I mean, this is business, right? A lot has happened with a couple of the portfolio companies, and we wanted to give them a lot more support. We wanted to put one of the questions that portfolio company CEOs will ask us is why you want to list our company and you don't want to list your own company. That's a question I have to answer all the time. Like, so why you want to list me and you stay private? If it's so great, why you don't list yourself then, So I have to answer that question all the time. A next thing that we considered is, and even for the purpose of this IPO, we want it to be very strong for our portfolio companies. When I started to grow this portfolio, we basically did a bond raise for around 600 million, and we used that capital to buy all these portfolio companies. So we were carrying the debt on the portfolio company. Over time, what you find is that we had to be servicing this debt, even though we've invested in these companies. We don't want to pressure these companies or put them in a position when they're not ready, just because we needed them to exit. So what we've decided to do was to put ourselves in a more patient position and wait for the right time to list the right portfolio company. So what this IPO does for us is, one, it releases any financial obligations that we have in terms of debt servicing, so that we don't have to pressure the portfolio companies and we can pick the right time that's right for them and not necessarily just right for us.
So most of the funds that you're going to be raising, that you hope to raise, intend to raise, are going towards repaying that debt. So you have 626 million going to settle existing debt, 30 million for invitation and listing expenses, and just 1.5 million as working capital.
Right.
So for some people, it may sound like a lot, like, okay, you're going to use all this money to settle this debt, which is good because you're going to save a lot in interest payments.
Yeah.
But then how do you turn around and find money to invest in other companies? Because you do have a cash flow problem since you haven't exited any companies yet.
Correct. So what you find is that, and this is a question that I've gotten before, of course. What happens is that we had originally borrowed the money to make the investments. Now we have all these portfolio companies. What we need to focus now on, Kalila, is not necessarily acquisition, but actually focus on the portfolio companies that we have and look at the ones that are ready to be listed now. So that's kind of like our focus right now.
So of your 9 companies in the portfolio, how many of them are close to being ready?
I would say how we assess companies being ready outside of their back office and their corporate governance and structure. How we assess companies is their earnings. When you look to bring a company to the market, you approach a broker. They want to see your financial performance. Is your company, are your earnings enough to have a PE multiple that makes sense for you to go to market? So most companies, profit before tax, our ambition is to get them to 120 to 150 million dollars to get a valuation of 2+ billion, so that when they go to market and list 20 to 25% of the company, they can raise in excess of 500 million. In terms of portfolio company or companies, and I mean these are disclosed in the prospectus. For example, if you look at Royal Medical, Royal Winchester Medical Group, if you look at their financials, their earnings before their interest and taxes is about, I'd say, around 70. So if they were supposed to clear their debt, they would be closer to $120 million in profit. These are some of the companies that we're focusing on getting to the market in the near future.
So Royal, you said, is close to being ready? Any other one?
I would say Elite Concept and Solution, and this is purely on performance. However, we'll see how that business goes now that they're going to be getting ready for rebuilding after Melissa. We hope that they could take advantage of the opportunity they have to serve the community in terms of rebuilding and signage and stuff like that.
That's a digital advertising company, right?
No, what they focus on, Kalila, is say you're opening a new location and you want money media outside. They have the machine that cuts those big signs out. They do have outside advertising signs, but that's not their main source of income. It's the actual machine that cuts all these big signs.
The big billboards?
Correct.
Okay.
Yeah. So that's a big side of their business. So I believe they have a strong potential. Some of the other companies need some work, but it's like kids, right? Some perform better in high school and some perform better in college. So if you ask me, I'd say those are the 2 companies that I kind of have my eye on now.
Within a year, you think?
Definitely.
So in the clip that we played, you were on with Che from MD Link. I noticed that their numbers are kind of up and down. They had a huge surge during COVID, and then after COVID, it kind of just dwindled. So what are the prospects looking like for them?
So MD Link has pivoted. A lot of people don't know that MD Link also has a company called Fleet Diagnostics, which is probably one of the few certified labs for like lab work, blood work, and that's a big side of their business. MD Link, based on discussions with the CEO, Che, the decision was to pivot a lot more from the numbers that they had was a lot more COVID related. The potential for the market now You'll see partnerships with MD Link and Canopy is in the mental health space, kind of like what a company called Better Health in the States, where persons go online, talk to a therapist, especially now with everything that's happening, is to kind of pivot more to that niche market, while Jamaica gets used to, going online, speaking to a doctor and getting a prescription online. It's growing, but it takes some time, and they also have some things in the back office, accounting, etc., that they need to tighten up on. So we've been working with them on that.
Right. All right. So we have to talk about risk as well, because first of all, in the prospectus, like 8 pages dedicated to risk, scrolling and scrolling. And the business model is inherently risky because you're investing in fairly young companies, SMEs, aiming to grow them. In the prospectus, you say the investment philosophy is guided by finding business opportunities that are often overlooked or rejected due to perceived risk. So talk to me about the risk level involved in what you do and who this investment may be for, because maybe it's not for the timid of heart.
Correct. I mean, look, when you invest in when we buy into a company, and I don't want to single out any company, it could be any company at all. If taking stocks was a company that we want to grow, there's a lot of risk that you take when you invest in a company. You have the risk that's directly associated with the entrepreneur. The fact that the entire business relies on the founder of the business. You have to consider that risk. If that person is not there anymore to run the company, we run the risk of one, taking up the management ourselves, or trying to find someone to run that company. Two, you're taking on the risk of their back office, their accounting. A lot of companies that you invest in, one of their weak points is their reporting. Even with public companies, I see that all the time, where they can't get their financials out on time. So what we have to do is we create our own management team that goes in with our own accounting team and build out their systems. What we have to do is look at their legal risk, anything that could harm the company. So we would bring in our legal team. These are typical business risks, but what you have to know is that in our prospectus, we have to still highlight all the risks that are involved. If you ask me what investors this is for, what I always say to myself is, when I invest in a company personally, I invest in businesses that I understand. And sometimes even if the business is complex, I invest in the entrepreneur running the company. I invest in their ambition, their character, and their track record. So, I mean, it's an investor's decision. That's why we have a prospectus out there to read it and determine and speak to their financial advisor if the risk is in their appetite range. But yeah, it's a pretty, this business model is not common. It's very common in the States. You have companies that will buy 100 companies and they just need one company to go IPO, and that just blows up the whole company in terms of profitability. So it's a similar model here. Only difference is we put a lot more work, direct work, into these companies.
Let's take a look at your income statement, your income. So we need to talk about the numbers. Sasha, please bring up the income statement graphic. And I want you to tell me what's going on here. So we see you started in 2020. So your company by itself, you're still pretty much a startup because you're only 5 years old, Dequity.
Right.
So that's another risk because you're still a startup yourself. But you started in 2020 with total income of just 51,000 US, grew that to 9.6 million in 2022. But since then, we've seen a fall off. So explain these numbers to us.
So I'm happy you brought this up, Kalila, because this helps people understand the business model very clearly. What you find is you will have segments where we're making 2 million US a year. And then you'll find that 2 years later, we make 10 million US. Why is that? Because we'll probably IPO that company. The reason why you saw that 9 million in profit there, Kalila, is because we successfully IPO'd Dolla, right? Building companies take time. But once you hit that mark with any other portfolio company, you'll see a spike in the profitability. And what you find is that you get a windfall of cash that you can keep on your balance sheet or continue investing or pay it out to the shareholders. That's how this business model works. It's not really a business model, Kalila, where you get up and watch watch for spikes every quarter because we can't list a company every quarter. What you'll see is our performance in terms of steady dividend income, interest income that we would have been getting from these portfolio companies, but you're not going to see a spike every quarter. What you'll see is a spike every year, or worst case, a spike every 2 years.
You did mention in the prospectus as well that most of your cash flow, your income, comes from dividend payments. But right now, only 2 of those companies are paying dividends. And then the others, it's kind of because they're still growing. You want to nurture them. You don't want to take out too much dividends. Exactly.
You can't take dividends out of a growing company. It doesn't make any sense.
Exactly.
So what you do is you wait until the because it defeats the purpose. If you're trying to grow their earnings, their return earnings, that they're a baby and you're taking money out of them just to pay yourself, right? Because you need to survive as a portfolio as the investor. We don't operate like that. So what you find is once like a Dolla is paying dividends, or for example, M24, we have wholly owned subsidiaries, like M24, which we control it. So we determine the dividend that comes over to us. And what you find is, for example, on the real estate development side, that company will get windfalls of cash each time that they complete a dividend, and you expect that some of that dividend will come to us.
Right. It can be tricky to manage, but you guys you're making it work. I definitely understand. Now, one thing I did wonder as well, when I saw, the numbers, how much money you're seeking to raise, 657 million, I think it is. Why list on the main market? Because that's below the junior market cap.
So what happened is because we've invested, and this is something that, we spoke to the stock exchange about, but how it works, Kalila, if you have a company that's private, if you had raised, for example, $300 million and in capital or in equity in that company before you go to market, when you go to market to do the IPO, they will subtract that $300 million from the 750 that you're able to raise.
Oh.
Yeah. That's something that is not very well communicated to the public or to persons who look to list. But that's something
that caught you off guard too?
It didn't. We were aware of it. We did see the risk in that. But the beauty about Dequity is we're a St. Lucian company. So we don't pay taxes on the dividends or capital gains anyways. So the same benefit that we would get on the junior market, we still got it on the main market.
So we mentioned dividends as well and how Dequity makes money from dividend payments. And if investors are to buy into this IPO, they may expect some level of dividends. What is the dividend policy?
I think the dividend policy stated in this is around 60%. But what I want to add to that is, and this is another thing that like investors, even when I was running other companies, we have to be very cognizant of, not because a company states that there's a dividend policy, not just my company, any company, that there's a dividend policy. A policy doesn't mean that that's what the company has to pay. Most times they'll state a dividend policy and then they'll make it clear that each year the board of directors will look at the performance of the company and determine if a dividend will or will not be paid.
Right. Looking at the investments that you've made in the past 5 years, prospectus says you evaluate 10 to 15 opportunities per year. You close 2 to 3 transactions per year, average investment of about 500,000 US. For entrepreneurs watching this saying, Dequity is investing in companies. How do I get them to invest in me? What do they do?
Again, the market isn't as sophisticated as I would like. There aren't a lot of places. For example, in the States, you have even websites that you can go on to seek investors. There's a structure for companies from pre-seed to seed. They have VC companies. They go up. They sell them to private equity companies, and they have this whole system. We're getting there, but slowly. I'd say most of the deals that we get are from referrals or from us seeing the performance of a company and reaching out to the principals of that company. Those are the two main ways. I still personally have people who reach out to me and I'll have them send me a pitch deck, whether it's on LinkedIn, Instagram, or through Dequity directly. But what we want to create in the near future is a standard place where investors can meet businesses and potentially get whether it's equity or debt. So that's something that we're working on now.
Where do you envision Dequity in the next 5 years?
So Dequity for me, Kalila, is like highly emulates Warren Buffett's Berkshire Hathaway.
One of our viewers said that sounds like Berkshire Hathaway.
So there are a lot of philosophies of Berkshire that we're gonna directly implement in the business, which will be very new. But in 10 years, I mean, Berkshire has hundreds of companies, right, Kalila? And not if you look at some of them not doing well. But that is the business model. It's like me doing the loans business, and some loans doing well, some not doing well. But what you want is to know that 8 out of 10 is doing well. And it's kind of like what you want to do here, where in the reverse, if you have 2 of them doing very well, you're doing great financially. So in the next 10 years, if we're at 10 portfolio companies now, we want to start to move at a multiplying effect, hopefully. If we're able to acquire 4 per year, that would be how much? We'll be at probably 40 companies in 10 years. And hopefully we'll have probably 20% of that listed on the stock exchange.
All is at just, how old are you now, 34?
No, I'm not.
Imagine when you reach Warren Buffett age.
A long time. I'm past 34 now. I was in the last interview. I'm 36 now.
Oh,
Look,
I'm not 34, I'm 36.
These standing out are gray hairs.
With his baby face as a Jamaican Warren Buffett. So imagine in the next 30 years where you're going to be. I mean, amazing things coming from you, Kadeen. I just wanted to point out as well. So Dequity's net asset value, according to the prospectus, is $1.24. The NAV is typically something that we use to measure the value of companies like yours, investment companies, holding companies.
Correct.
So $1.24 and your share price is $1. So we're getting a discount.
Yeah. Let me say something regarding that. Because of how the market was kind of down. Yeah, we took like a 30% discount to make it attractive for the investors, so they buy in and get an upside based on the net asset value. But what I want to add to what you pointed out, Kalila, is the net asset value that you're seeing. The net asset value at IPO will increase because most of the money is going towards clearing debt. So that's actually an upside for the investors who value a company based on NAV.
Okay, good to know. Anything else that you want to mention before we go?
No, I mean, look, I'm happy to be on the show. It's a very tough time now to be in the market. We're very cognizant of that. Tonight's a tough night for the viewers. Jamaica is playing one of the most crucial matches for the world. Well, the most crucial match for the World Cup qualifiers.
Yeah.
But yeah.
Half of the country still doesn't have electricity or internet on top of that.
Yeah. Can you imagine them missing the game and just being in the situation that they're in now? So again, my sympathies to my family, friends, to everybody in these parishes affected. And we're going to build back Jamaica and build it back stronger. And the IPO is next week, Thursday. Subscriptions, it opens at 9 a.m. So we encourage persons to apply early. And let's see how we can grow together.
One Coco said, it's good that the micro market will come. Kadeen can list all those small companies. Keep working hard. I don't like that Dolla is not under his management anymore.
Well, Kalina, I can say something with her. What One Coco said. One with the micro market, I'd say that, I mean, we had discussions with the stock exchange regarding the micro market, and trust me, that would help a lot, because instead of aiming for these high earnings numbers, because you'll have companies that are very good, Kalila, but they're making like $50 million a year. All they need is the push of some equity and what being a listed company offers for them to get to the next level. So the micro market actually will be a good thing for those companies. And in terms of Dolla not being on I'm not running Dolla anymore. What I'd say is that I'm still a director on the board. I still steer the ship some way, and I've still maintained my holdings in Dolla. And now I'm the majority holder of this listed company, so I'm not going anywhere.
Okay, good to know, Kadeen. Thank you so much. And to our viewers, if you like what you hear, you can apply for this IPO via VM Wealth's IPO Edge platform, and the link is in the description. That's Kadeen Mairs, CEO of Dequity Capital, the 36-year-old taking his second company to market in less than 5 years. On top of that, doing big things. Well, it's time for tonight's poll question. I want to know, what do you think after hearing all of that? Will you be investing in Dequity's initial public offer? Here are your options. Yes, that's A, yes, they have a solid plan. B, no, it seems very risky. C, I'm not sure yet. Or other, leave a comment. You can leave your comment in the chat. You can take the poll on the community tab here on YouTube. You can, where else are we? Twitter, X, or tomorrow morning's email. Take that poll. Will you be investing in Dequity's IPO? Yes, they have a solid plan. No, it seems very risky, or I'm not sure yet, or leave a comment. Leave your answers in the chat, or take that poll on our various social media platforms or in tomorrow's email. Up next, we've got your market recap, and the analysts are standing, well, one analyst tonight is standing by.
Time now for your market recap, brought to you by MyMoneyJA.com, the official data partner of Money Media. Get 10% off your subscription with the code MONEYMISSION. The JSE Combined Index lost 3,900 points last week. That's 1%. 120 stocks traded across the main and junior markets for the week ending Friday, November 14, 2025. 45 made gains, 57 lost value, and 18 stayed the same. 89 million shares changed hands on the Jamaican dollar market, valued at $409 million. Radio Jamaica was the week's most traded stock, with 15 million shares changing hands. TransJam traded the second highest, starting Monday at $4.27, and Atlantic Hardware rounded out last week's most traded stocks. Atlantic was also the week's biggest loser, down 22%, reversing some of the massive gains from the week before. It started November 17 at $1.13. Now let's see who had the biggest gains. JetCon was the week's biggest gainer, up 17.5%. It started Monday at $1.41. Pulse was up 17% to start the new week at $1.18. And Paramount Trading started Monday at $1.36, up 13%. On the losing side now, Jamaica Broilers was the week's second biggest loser after Atlantic Hardware. The company reported huge losses, sending the stock down 21% to start the new week at $18.45. And MPC Caribbean Clean Energy lost 18%. Over on the Trinidad and Tobago Stock Exchange, the composite index lost 8 points last week. That's about 1%. Massey was the TTSE's most traded stock. It opened Monday at $3.43 TT. NCBFG was the TTSE's top gainer, up 5%. And on the losing side, Angostura fell 11% to open Monday at $11.31 TT. Over in the U.S., the Dow Jones was mostly flat last week, while the S&P 500 dipped 1% and the Nasdaq fell 2%. At the pumps, gas and diesel prices were all up $1 last week. In foreign exchange trading, it took an average $161.62 Jamaican to purchase $1 US last Friday. That's 33 cents more than the week before. The Bank of Jamaica has pumped $120 million US into the market since the passage of Hurricane Melissa. $1 Canadian cost an average $118.05 Jamaican. $1 British pound cost $213.16 Jamaican. And you could buy €1 for $188.71 Jamaican on average. Finally, on the crypto markets, Bitcoin prices fell 6% last week, trading at $95,740 on Monday. Meanwhile, Ethereum prices were down almost 7%, trading at $3,199 on Monday. Market Recap was brought to you by MyMoneyJA, the official data partner of Money Media.
Subscribe to my newsletter for money news like this straight to your inbox. Go to getmoneynews.com to sign up. The link is in my bio. Let's get this money.
This segment of Taking Stock, The Analyst, is brought to you by JMMB Group, your best interest at heart.
The views expressed in this segment are not necessarily the views of Money Media. This information is for educational purposes only and is not intended as financial advice. Please consult a licensed financial advisor before making any investment decisions.
Welcome back, and we just checked the live score. Still at 0-0, Reggae Boys versus Curacao tonight. I can't say keeping you because you're watching this because this is what you want to watch, and I'm grateful for those of you who are with us tonight. Moments with Stace says C and D, responding to the poll question. Only reason why I would consider is because I like how Kadeen handled Dolla when he brought it to market. So that's a response to our poll question for this evening. Will you be investing in Dequity's initial public offer? She said C and D. C is I'm not sure yet. So far, that's the feedback that we have. All right, let's introduce our analyst for this evening. His name is Leovani Dillon, no stranger to the show. He's corporate manager at JMMB. Welcome back, Leo.
Yeah, man. Good night, Khalila.
Okay, tonight we are talking about Carib Cement. Their Q3 numbers are out. Break it down and tell us what's going on. What are the highlights?
All right, so off the top, so the revenue is up, so that's up about 30%, and that's up about to $8 billion, and then the the profit for the company is about 2.3 billion, so that's up. So if you look over the last 5 years, you can see that the company is really steadily grown. The revenue of the company has steadily increased, and then when you look even on the profitability of the company, that's also up. And in particular, if you look on the last 9 months, it's about flat. But the key thing to bear in mind is what the company is setting up for the future in terms of what's happening under the hood. So first, let's take a look at the balance sheet, right? So the balance sheet of the company is quite good. So if you look at the debt levels, it's basically non-existent. They have a few finance leases or so, but not a lot. But then when you look even on the current assets of the company is fairly strong. Most of that is just cash. They have about $9 billion. So that's also strong. So you have a company that's set up well that way in terms of the quality of the balance sheet and in terms of the profitability. But it's not shown here, but even the operating cash flows is very strong. So for the last 9 months, they generated about $6 billion in operating cash flows, and then some of the main outflows for the company's dividends, about 1.7 billion so far for the year, right? And usually they pay dividend once a year, right? So if we move on here a bit, so the stock price has done fairly well. So if you go back a little bit to about mid 2021, that's when the stock price peaked around $1.20. Big sell-off to around sub 60, around $50, and then now it's recovering a bit, and you can see that upswing here on the tail end of the graph, right? Now, we zoom in a bit, right? So we're looking now year to date for the company, right? So year to date, stocks up 14%. And of course, to put that in perspective, year to date, the main market is down about 7%. So that kind of gives you, an idea of the outperformance that you see there on the stock, right? And then now if you zoom in a bit more and you look on how the stock has performed since the storm, you can see where the stock is up about 4.6, main market's down about 4. As you can expect, that it's gone away on market sentiment overall, but Carib Cement kind of gone around that. Now, one thing to note is that if you look up to today, so today it fell off a bit, but up to today, the stock was up over 15% since. But it fell off a bit today. Based on it seems like there's some price action in the market in terms of where the volumes moved on it. So I suspect that's going to probably recover at least a lot of those losses that you saw today by tomorrow, because it seems like it's just a trading activity on the stock in terms of where the volumes moved. That kind of tilted the weighted average price in terms of the close price of the stock, right? But so now, all right, so we're wrapping it up here. So we're looking at the volumes, right? So the value traded on the stock. So in 2021, around the time when the company hit the highs, the activity was, it was fairly active, but average daily value in terms of the money moving in the stock was around $8 million. Right now, it's around 4 million. So you can see kind of upticking in terms of interest in the stock, in terms of trading activity. And of course, that means a lot more because overall market activity has been a bit dull. So the fact that you're seeing that uptick in activity in the stock is a positive signal, meaning, interest is kind of building in the stock. Now, if you look on the PE valuation of the stock, right now it's around 14 times. If you look at the last 5, 3, 1 year averages, it's marginally above that. Which you could argue is somewhat justified given, the underlying dynamics of the company in terms of the debt burden, the revenue growth that we're seeing from the company. You could argue that that's fair, right? And then also when you look on the price to book, you're seeing a similar setup where it is kind of recovering. So it's not near the lows, but it's nowhere near the highs that you're seeing it. So then there's a lot of potential upside there in terms of, where the book is, where it usually is. It's fair in terms of the current price to book ratio. Now, when you look on the dividends that this company is paying, the dividends apparently, very important to investors. You can see that there's been a steady increase in terms of the amount that they've been paying. Seem that they usually pay once a year, and you can see that kind of steadily stepping up. And notably, they do have a lot of space to in the future increase because again, the company last year, the last 9-month period, ended 2024, September 2024, the company actually generated around $10 billion in operating cash flow. And as I said, the dividend payments amount to about 1.7 billion. So they actually do have a lot of room to improve that over time. So you see that increase, but it's just to point out that while you see that increase, they have a lot more room where they can increase in the future, right? Because again, no real debt, so they don't have that overhang. So it's really the money that they're getting is really building the cash pile, paying dividends, and then reinvesting in the business, new plant and equipment, kiln upgrade to improve the efficiency. So basically, they're setting up well for the future, right? So they have increased capacity beginning in 2025. They finished the upgrade that allowed increased capacity. So that's what the money is going to, right? But needless as I say, there's room now for growth in the future because of the amount of cash flows they're generating and the current dividend rate that they're paying out in terms of the amount of money, right? So finally here, right, like to show this here again to kind of stress the importance of long-term investing. So you can see where if you take the capital gains, this is as at the end of 2022, sorry, and you take the cash flows that you're generating as a dividend and you reinvest that. And of course, I take the after tax in because there's a 15% tax on dividends. I'm taking that into consideration. So you reinvest those after tax dividends, you buy more stock. That would yield you a 52% return over that investment horizon. So that part of that, of course, is the capital gain, is the dividend reinvested performing for you, and that would have netted you an extra 14% to basically reinvesting that money, right? So that's basically it. So to kind of just sum it all up, so what we're seeing, you're seeing steady growth there. You're seeing where the company has the balance sheet, and I think based on what's happening in the space, the dynamics for the company was set up well. But based on what's happening in the space, I think what investors are looking at is that they poised to at least maintain the quality, so they can grow or at least maintain the strength of their in terms of their operating cash flows and the profitability and revenue. Because they'll be a crucial part of the reconstruction effort. So it is a company that's been doing very well because all of the development infrastructure spend. And we see that continuing for them. And of course, it seems that the market agrees because it's, as you can see with the price movement, it's been pretty strong.
Right. So Carib Cement is one of those companies that you would expect to do well, to have higher revenues in a time like this, given Jamaica's rebuilding process after Hurricane Melissa. So what should investors be looking for when assessing this stock?
Yeah, man. So to assess a stock like this, one of the key things that you want to see is those strong operating cash flows. The nature of their business is one where they should be generating that. I mean, if you'd have to go back a while now to find the days when Carib Cement isn't generating that much cash flows in terms of not strong cash flows because they had a lot of debt at the time. But that is one of the key things that you want to see for a company of this nature is what's the operating cash flows like. Needless to say, in their case, it's excellent. And of course, the next thing is that the debt levels are low, which is also good because what can strain a lot of companies is the interest rate environment that when it's fairly elevated, and of course the BOJ they did 25 basis points for the year, they haven't really been cutting much. So that relatively elevated, compared to a few years ago, interest rate environment is putting a strain on a lot of companies' balance sheet. But Carib Cement, of course, is exempt from that because they don't really have any debt. There are a few lease liabilities or so, which technically count as debt, but effectively it's not really the same, right? So what happened is that coupled with that strong operating cash flow, coupled with a good outlook in terms of being basically the sole player in the space in Jamaica, the increased capacity, we even see them exporting now out into the rest of the Caribbean while still meeting our local demand. So it really does set them up well. So they do have the hallmarks that would make them be an investment to consider.
But at the same time, Carib Cement is also known to have had shortages in the past. They were at one point restricting customers to one bag of cement per day.
Yes.
Would they be able to keep up with the higher demand that is expected to come their way now?
Yeah, man. Because again, that recent upgrade that I did in terms of capacity upgrade, I think it added 150 thousand metric tons to the capacity, right? Which you could see fruits of it before because they actually started to export while meeting our local demand, right? So that was in Q3 they pointed that out. So that increased capacity. So what could change now because local demand might surge is that maybe that whole export thing they have to do away with that and just focus on local demand. However, because they had built capacity to the point where the plan was, meet our local demand and export some, it puts them in a position now where they're likely to be able to meet our local demand with the current capacity that they have. So yeah, I do think if no more than ever, they're in a position to do that, right? So they're in a very good position.
Good to know. So this is one that we should be keeping our eye on. Who is this investment for? What type of investor?
Yeah, man. So this is more probably moderate investor, moderate aggressive. The primary reason why I would say, in general, when it comes to the investment class, in terms of the investment categories that I put in investors in general, with equities, conservative investor, yes, could come in, but they would. The idea behind it, all right, how should I put it? All right, this is the thing. When you're looking at, I don't like to look at a single stock like that in terms of when you're building a portfolio, or you'd have to build an entire suite. So for example, you'd have at least probably like 15 companies, and then you're checking, the correlation between them, and you're checking how, the different stocks moving together. So yes, but in general, right, I would say that this would probably be more in the moderate to aggressive category. Part of the reason for that is that the price action on the stock, it tends to be a bit volatile. So of course that could throw off some investors, relative to some other names out there that are much more stable. So for example, like GK, in terms of the price action, is way more stable, and in the business model, more diverse. But this one, though, it does have that balance sheet, the cash flow, and the economic environment in which they operate, that, they're stable, right? But it's just that they're not I wouldn't put them in the conservative class, but I'd put them more in the moderate aggressive class. But not to say that they couldn't be a part of a portfolio for a client that more conservative. It's just that they might have to weight it lower than a client that's a little bit more aggressive. So that's why I kind of want to shy away from that, because it's a complex conversation. I don't think we have the time to go into all of the points, but at a high level, that's how I look at it.
Okay. Well, thank you so much for giving us that update, Leo. Much appreciated.
Yeah, man. All right.
That's it for the analysts. And at halftime, the score, Jamaica Curaçao, is still 0-0. Ooh, this is tense, nail biting. So I'm going to give you the next half to watch the rest of the match. We'll take our final break and come back with your comments.
This segment of Taking Stock, The Analysts, was brought to you by JMMB Group, your best interest at heart.
The Money Mission Workbook is now available for sale on 7 Crave Marketplace for delivery island-wide. Order your copy now at 7cravemarketplace.com or moneymissionja.com or download the 7 Crave app. You'll get same day or next day delivery in Kingston or delivery within 2 to 3 business days island-wide. Let's get this money. And of course, we will be having some special Black Friday deals next week. So check out moneymissionja.com for your copy of the workbook or the course. If you're not a reading person, because this is a lot of reading, if you're not a reader, take the course. Everything is in video format, interactive quizzes and activities for you to do and so on. moneymissionja.com is the place to be next week for our Black Friday deals. One Coco investor says A for sure. That's the response to our poll question. Will you be investing in Dequity Capital's IPO? So they're saying yes, A for sure. We will put our money behind Kadeen, LOL. We've given our money to worse companies in the past. All right, One Coco is on board with Dequity Capital's IPO. Remember, that opens next week, Thursday, November 27, and you can apply via VM Wealth's IPO Edge, and the link is in the description if you just want to click right through and find out how you can apply. The minimum investment is 10,000 Jamaican dollars, so pretty affordable for anybody who wants to participate in this offer. Not a lot of comments tonight, and I understand why. We're competing with the big match, and that's okay. And also half the country still doesn't have lighter internet, so that's okay. I know a lot of you will be watching this on the replay. Before I go, don't forget that, like I said, you can get the Money Mission Workbook and our course at moneymissionja.com. It's on Amazon, it's on 7 Crave, or you can buy it at select Fontana Pharmacy locations. Also, don't forget to subscribe to the channel, like the video, share with a friend, and follow us all over social media at kalila.money and at moneymediaja. Remember to report scammers and impersonators when you see them. Remember that I will never DM you asking you to give me money for any investment. I don't do investing on behalf of other people. The only thing I sell is books and courses. If you want to connect with our analyst this week, check the description box below for Leo's contact information. Now tell a friend about taking stock, because investing is the new sexy. So let's make it cool to talk about money. I'm Kalila. Thanks for watching.